Good afternoon, live from ZTN Studios in Harare, Zimbabwe. Welcome to the Mint Special, Economic Panorama. Our discussion this afternoon, 2020 in retrospect and economic outlook for 2021. Hello, I'm your host, Andy Hodges. This book into Economic Panorama on Capi Talk every Thursday at 7 p.m. The year 2020 will go down in history as one of the most difficult years . 'HRP, launched on the 2nd of April 2020, indicated that 7 million people, that's about the COVID-19 pandemic affected the Zimbabwean economy through a number of channels, which include supply chain prices, decline in foreign direct investment flow, of the major economic highlights, trends and developments of 2020, as well as provide an outlook for the Development Research Institute of Zimbabwe, Ledriz, and Professor Gift Mugano, an economist. We were supposed to be first segment. I asked my guests, what were the economic highlights for 2020? Highlights for the year 2020.
Thank you, and quite a number of them. I think must not repeat. You recall that in 2019, 24 June, government introduced we made a prediction in our discussion that the first quarter of the year, 2020, we are going to dollarize. And it happened. And
even though the government says it hasn't happened.
Yeah, but what so for me, when you go for Zimbabwean dollar in June 2019 and the 9 months in policy making, and we need to do it right next time. The other issue which it was just a statement. I think from an economics point of view, I think it's a country made an effort to provide a real stimulus. And it became an issue in the economy because you have an economic
economy, as some commentators have said, was already on life support. Right. So really the 2020 was trying to, I suppose, to the Transitional Stabilization Program, try and maybe address some of those
support from 2018. So from the 2018, from 1 October 2018, you remember when the governor sent it was TSP. From there, from November 2018 up to June 2020, it was an economic October to June 20. Must not do that. But what also excited me in 2020, maybe one in March, right? And I remember I said that it's not going to work. It was disbanded, right? To manage the exchange rate. Then we do. When we disbanded even the team to manage the cracking team to crack the exchange rate, we went for the auction system to me is not the best case scenario.
Of course, depends on where the foreign currency is, and if exporters will be willing to sell into the market. Right. But Naomi, let me look at some of the successes, or the government-stated successes. I mean, when you look at inflation in the first quarter of 2020, it was over 750%. It currently is sitting at around 471% year on year, and month on month, I think the figures are about 4.37%. So the government is touting that as obviously they've managed to get that under control, or to some degree under control. The central bank is also touting that their money supply growth is now under control, and that they're managing to just sort of increase money supply based on fundamentals, which is, of course, money supply has to increase in any country. And of course, what affects citizens is that citizens went from almost daily price increases for basic commodities in the first half of the year to some resemblance of price stability. Sure, prices were going up, but at a much less degree than they were in the first half of 2020. Your comments?
Okay, thank you very much. I'll start from where Gift left, and in terms of highlights for me, what comes out to my face, I look at the human being, the person. Let's take ourselves back from the macro level to the micro level. So for me, 2020, for me, what laid bare was the fact that poverty increased for households. If you are saying the statistics for inflation, what inflation does is that it just erodes incomes, whether it's wages, whether it's pension funds or any other income, it just erodes. So this 2020 scenario reduced most households or individuals to paupers.
And with the lockdown, of course.
And of course, with the lockdown, it then made everything worse. So we also faced a new wave of erosion of incomes, even of pensions. If you look at what happened in 2008, 2009, when we went for multi-currency, that wave of erosion of incomes repeated itself in 2020. So if I'm looking at a household, you found that most people, even disposable incomes, were reduced drastically. And that affects demand even in an economy.
A commentator said, in fact, yesterday at the conference I was at, they said that the shops are full of goods, and probably one of the major reasons could be that Zimbabweans can't afford to buy them. I mean, it's an interesting concept.
Yeah, it's very true, because inflation was high, 700, at a time when wages were stagnant. So it constrained a lot of households.
But I mean, okay, right. So we know we have challenges. We know we didn't have money on infrastructure spending for many years prior to 2020. We knew our health system was already at straining, if not breaking point, prior to the pandemic. And I think COVID-19 showed the inefficiencies in our health system, not worrying about our infrastructure spending on issues such as education. But surely, do you think that the government got it right somewhere? And where did they get it right, and where did they get it wrong?
I think maybe where they got it right, of course, is the forex, introduction of the forex, at least in terms of stabilization of foreign exchange. So I think that in itself brought some kind of stability when we check what was happening with the parallel market vis-a-vis the official market. So that, for me, was a good intervention. However, of course, with challenges that we have. And of course, opening up another forex system, exchange system for the SMEs was also a major highlight. Although, of course, with challenges that...
I mean, Gift, the governor, same question to you. Whether the government get it right or whether they get it wrong? I mean, the governor of the central bank is saying that exports are up. I believe export receipts and FCA accounts are hitting $1.6 billion as of November. Diaspora remittances are up almost above 33%, in fact, which is unusual because they thought diaspora and remittances would come down. As I said, inflation seems to be coming on the downward track. You know, I mean, surely there must be something you can point to say the government did get something right. And of course, they did get something wrong, like everyone.
Correct. So, as Naomi said, the auction system was a plus. Clearly, it provided some bit of impetus on the trading of foreign currency. And the rate has stabilized. Yes, there are challenges in terms of the turnaround of clearing the money or making payments to the who have won. Exports have gone up. That I can confirm.
And imports down as well.
Yes, but with a better quality than 2019 actually. 2019, the imports were down, but 32% of the imports which were going down were raw materials. So we're celebrating poverty, right? Rather, you want to see importation of raw materials to increase production. But this year around, I think it's a bit more balanced. In fact, from a figures point of view, in August, our exports had gone up by 4.9%. And I'm sitting here also wearing a hat of Zimtrade because I sit on the board of Zimtrade. So I quite understand the dynamics there. So very impressive. Again, remittances have gone up. And one of the reasons why the remittances in the formal channel has gone up is because of COVID-19. Most of them were coming through the buses, yeah? So the buses were not coming through.
So we're putting it through the formal channel.
In the formal channel.
But then again, you look at, I mean, I want to get back to Naomi's point, Gift, which is an interesting one. CPI, I mean, that's hitting what? Almost 19,000 consumer price index. I mean, for an average family of 5, if I'm not mistaken. I mean, and it's back to the point that salaries didn't keep track with that. And that's really down, of course, again, to the lack in 2020 of increasing production or job creation. Yeah.
Clearly, I think the issue of the poverty line, it's an issue, and I think the Minister of Finance did not do it right when it comes to the minimum tax-free threshold. Morally, you should then try to allow that anything below the PDL, the poverty line, you don't tax it. So if it is down, if the people are getting less than that, and you then tax anything above 10,000, and I think government was not a bit sincere to open up for consumption, aggregate demand, and also raising income. But for me, where I sit, I think it's much more about stability in inflation.
So that's a positive.
Yeah, that's a positive. But it's not stability, actually, because if it is around 401% now, I think the latest figure is still chronic inflation. But the direction of moving down from 8.37% in July to 401% in November is a positive direction, sustained by the stability in the exchange rate. And of course, as we go on the discussion, we'd want them to understand what should be done going forward.
We'll do that in our following segment. Naomi, before we go for our breather, just any comments that you have?
Yeah, I just wanted to also say, of course, COVID, we have it. One of the major issues where I saw the government getting it wrong was on the issue of the response to COVID in terms of safety nets for the people.
Social protection.
Social protection in general. I think whilst the move was sincere to provide safety nets, but the payouts were not meaningful at all. We should also not leave out that area. In terms of women's role, the whole issue about the unpaid care work and domestic work. I think for women, 2020 was one of the hardest years. When then lockdown happened, the burden, it was more like an invisible tax on women.
So I suppose some things they did right, some things the government did right, and some things they did wrong, just like everything. I think that the trick is now, when we get into our next segment, to see, did we learn from these and what we can do going forward? It's time for us to take a breather. If you have any comments or views on our program this afternoon, please feel free to contact us via our Facebook page and Papers TV Network, or via our Twitter handle @ZTN News. You're watching the Mint Special Economic Panorama. Our discussion this afternoon, 2020 in retrospect, an economic outlook for 2021. This broadcast is brought to you by Papers TV Network ZTN and our partners, the Labour and Economic Development Research Institute of Zimbabwe, Ledriz. Now, after the breather, we ask, what needs to be done in 2021 to make the economy more resilient and increase productive capacity? Is Zimbabwe's Dutch foreign exchange auction system sustainable? The Mint Special will be right back. Please don't go away. Welcome back. You're watching the Mint Special Economic Panorama. Our discussion this afternoon, 2020 in retrospect, an economic outlook in 2021. This broadcast is brought to you by Papers TV Network ZTN and our partners, the Labour and Economic Development Research Institute of Zimbabwe, Ledriz. Please also tune in to Economic Panorama on Cappy Talk every Thursday at 7 p.m. Gift, we've talked about 2020. Now let's have a look and see some questions about going forward into 2021. Now, the COVID-19 pandemic, look, it exposed some serious structural weaknesses in the economy. So what do you believe needs to be done to make the economy more
the agricultural season? We are productive. We get it right in Fumvudza. Is we hear that there's a Fumvudza program. Why I'm emphasizing Fumvudza? Because 70% of the land and agriculture is under small-scale, smallholder farmers. So the concept of Fumvudza, to me, speaks very well with the desire to raise productivity. The only challenge which I would want to pose to government to deal with is corruption. Because that's where people will then abuse the inputs and also the timely delivery of inputs, fertilizers in particular.
But let me just get back to you on that issue on production. I mean, we can increase production, but we still need to sort out our value chains.
Correct.
I mean, that's one of the underlying issues that we do have to address in 2021, because we can increase our crop output at the communal farmer level, but we still have a problem of getting it from the farms to the market.
Correct. Perfect. That's a very fundamental point. So we need to first deal with the production. I like the concept of the commodity exchange, which is in the budget, to which government put aside $500,000 as equity contribution, which will then help in the operationalization of the commodity exchange. And I hope it will be private sector led. I hope the majority of this shareholding is coming from private sector. It's going to create a market for the commodities. On average, studies from FAO shows that 30% of the grains in Africa is lost through post-harvest losses. And when you have a commodity exchange, then you have a market for that. It's one thing. But also to say that if you look at the National Development Strategy, and I think you're talking about 2021, which is very good, and it's starting in January 2021. There are value chains which were specified in that NDS1. This maize value chain, the wheat value chain, the pharmaceutical value chain, even the cotton value chain. The Ministry of Industry and Commerce must operationalize working with the businesses, CZI in particular, to make sure that those value chains are connected. Right. So for me, it's about the implementation again of the value chains, which I already spelled out in
implementation
that
is
key.
Now, Naomi, I like you to comment on what GIF says, but I also want to ask you this. I heard yesterday from the Tanzanian ambassador to Zimbabwe, and effectively Tanzania did not lock down in any way. They kept the market open. They believe that lockdown would harm the population because most of their workers are in the MSME markets. So they thought, let's not close it down. And in fact, according to the Tanzanian ambassador, the economy actually had growth in Tanzania over the lockdown period when most other countries locked down. So in your opinion, how effective has been government's response to the COVID-19 pandemic?
Well, there are some maybe a little bit of positives, but from where I am standing, I think there was need to do quite more. Number one, I think we had economic stimulus package, 18 billion. But up to date, we still do not understand or know how much of that 18 billion has been allocated. What has been the impact of that? Because from what we are seeing with the economy, we are not feeling as if that 18 billion has been injected
and
in
also,
the
economy.
economy.
For social services, what is the number? 4.6 billion, if I'm not mistaken, for 2021. So in essence, do you think that the minister now needs to really focus more on social protection, safety nets, particularly to reduce the poverty and inequalities in the market or in the population in 2021? What would be your comment?
I think that's imperative. You give people social protection, you enable them to cushion themselves. You enable them to re-engage again into economic activities. So priority for sure, for me, social protection has to be given priority. And 2021, the NDS has set up a very good, integrated social protection system. Which has 4 pillars, which is good. But of course, it's not enough to have good policies. It's about implementation of those policies. That matters at the end of the day. So for me, as I said, social protection, but also industrialization. I pick up from what Gift has said. I think COVID-19 has exposed us in terms of our weaknesses, industrialization. We were relying on imports and so forth. So when all the borders closed, then there was a huge outcry from households.
No, I mean, one thing I think the minister tried to do, or he's tried to say it in the budget, is to bring more of the informal economy into the formal sector, because it's clear that to fund the budget, we need to increase our domestic resource mobilization. We know that we're not going to be getting money from multilateral donors and so on. Already the flows are going down. I'll ask you a question about it later. But that is an issue, isn't it? To start to bring in the informal to the formal.
Yes. It's not a one-day thing. It's a process. The formalization process. I think ILO convention recommendation has given us as Zimbabweans a platform to use, to tap from that recommendation on how to transition from informal to formal. But I think what we are missing as Zimbabwe is that process, it remains kind of a preview to a particular sector in the economy. There are huge outcries from the Informal Economy Association that they are not being also engaged in this process. So these are the beneficiaries. So how can you develop a policy without inclusion of the beneficiaries?
Lack of collaboration or communication.
Yes, so there's no buy-in. And also around formalization, I think there's so much delays. There was a time for COVID when the government said we want to provide COVID funds and SMEs should come and formalize. But it took ages just to to register. So we need to also seriously rethink and recast our formalization strategy. I think we have more scope, especially on registration, the taxes that needs to be paid before you even get a certificate of operation. Now we have presumptive tax with us, the $30 and so forth. So it almost like it's punishing or penalizing the informal economy rather than supporting it like other countries have done.
Gift, I want to throw some numbers at you. The Confederation of Zimbabwe Industries 2019 CZI Manufacturing Sector Survey, they said industrial capacity utilization fell by 11.8% to 36.4% in 2019 from 48.2% in 2018. And for 2020, it's set at 27%, which is a 9.4% decline from the 2019 figure. This is from CZI's own numbers. And of course, I think Naomi mentioned something there which is interesting, is the ease of doing business. Obviously, 2021 is something that we'd look at, and I'd like you to comment on that. But back to your point about production. You said we need to produce. How do you believe that we can increase production capacity utilization in 2021? What needs to be done to improve it?
Thank you. I think the first thing is to put the right environment for people to produce, for business to produce. And you need reforms. The ease of doing business, as you are saying, must be dealt with decisively. You need the key utilities, for example, power. You can't talk of production when there's no enough power, energy to do production. You need water, you need irrigation. Those are the critical enablers. So it's a whole mix. Right. Then you also look at the general policy framework. They should be consistent in the policy. I always say the best stimulus package which you can give to business under COVID-19 is a policy environment which is credible, which is stable, which is enabling business to think and to plan in a long term. You know, what we're doing from 2018, as I said, of running the economy on statutory instruments and inconsistent policy reversals must not happen in 2021, right? Then the other issue is to deal with issues of the tax regime, for example. Right. How do you think you are going to raise production when you are charging the business high taxes? You are taking the capital, you are crowding out the private sector. So there is always an issue, the Minister of Finance. They think to raise more revenue is to charge higher taxes. There's a conventional wisdom which argues that if you reduce the taxes, there's more compliance and more efficiency in tax collection, and you tax a higher.
I want to look at three issues, and maybe both of you. Naomi, let me turn on this. I mean, there's three important issues I think could be important for 2020: beneficiation, import substitution, and of course a robust and sticking to it Buy Zimbabwe campaign. I mean, we've always advocated for Zimbabwe, the government, to have a percentage of all of their purchases done locally and so on. But I mean, these are three issues which I would hope would help stimulate production into 2021.
Yeah, I'll start on the Buy Zimbabwe campaign. It's a very noble initiative. So we are also saying that process, that initiative has to be supported, of course, on the production side. And I think we've talked a lot about how production can be stimulated. But we are also saying you can have the produce. Yes, we have, let's say, industrialized. We are now producing. Who will buy those things when people's disposable incomes are still very low? So you have products, and you are saying Buy Zimbabwe campaign. Where will people get the money to buy? So there is also need to balance the two. Yes, Buy Zimbabwe campaign, but also look at what incentives is the government giving to workers, to the income side. So if there's no stability, inflation continues to go up, it's not managed, then we are not doing anything. The equation is not balancing.
But we hope as well we have a good agricultural season, because obviously that will go a long way towards import substitution, particularly of some of our products in the shops. Now, Naomi, we do have to take a breather, but I want to ask you, hopefully very briefly, this question. You know, you both touted the foreign exchange, what we call the Dutch auction system in Zimbabwe, as a measure of success for 2020 that the government introduced, at least bringing stability to the exchange rate and to a certain degree eliminating, as I said, to a certain degree, the parallel market. So the question is this sustainable going into 2021, and can these gains be continued?
Well, for me, I think already what we have seen is that not all bids are being allotted, right? So I think there's also need to look at that perspective.
But outside the auction market?
Yes, as well. even the SMEs, I think for the SMEs, the benchmarks are still very high. The minimum requirements are still a little bit high.
Was it 50,000?
For the SMEs, is it 2.5 or something?
Yeah, okay.
Around there. But we are saying, look at the context. Look at the people that you want to be players within this auction. So I think maybe some adjustments need to be done on the minimum requirements for participation in the auction.
Gift, briefly, we have to take a breather, but your comment.
Yeah, my comment is that the only lifesaver for the auction system is enhancing production. So we don't import at least about $1 billion of agricultural produce which we are importing. Syria was taking $500 million out of that. And also managing money supply, because if you have more money supply in the market, the rate will go up. Then my last point is that the dollarization environment, which government is denying, is going to serve the auction system. Why? Because most companies which are collecting the US dollars today, they are already having a domestic nostro account, which would then be used to get their import requirement. They are not going to the auction system. So if there was no policy framework to allow companies to price in US dollars, clearly the auction system was going to be under attack.
Because you need that to support the auction system, having people spending in US dollars.
Yes, because obviously when you collect it, I can tell you that most of the companies are not going to the auction system. That's why you see the numbers are very small, 30 million per week, but our import per year is about $6 billion, right? Where is the money coming from? It's the domestic resource mobilization which is being done by companies when they are pricing the US dollars.
All right, it's time for us to take a short breather. Should you have any comments or views on our show, as usual, please send them through to us, to our Facebook page, and Papers TV Network, or via our Twitter handle @ZTN News. You're watching the Mint Special, Economic Panorama. Our discussion this afternoon, 2020 in retrospect, an economic outlook for 2021. This broadcast is brought to you by Zim Papers TV Network, ZTN, and our partners, the Labour and Economic Development Research Institute of Zimbabwe, Ledriz. Now, after the breather, I asked our guests, can the government win its fight against inflation and money supply growth? And is the economy on the right track for 2021? Don't go away, the Mint Special will be right back.
Life will never be the same again.
Absolutely. No. How do you tell someone in Bari or in Soweto that they should exercise social distancing?
Every single one of us, barring a few, are praying more.
What is the health economic cost of what we are trying to achieve?
I don't know whether his chairman knows he runs at about 9 in the morning.
Yeah, I've just got those symptoms, so I just called the doctor and and then he just advised me to have to stay at home, eh?
Welcome back to the Mint Special, Economic Panorama. Our discussion this afternoon, 2020 in retrospect, an economic outlook for 2021. This broadcast is brought to you by Zim Papers TV Network, ZTN, and our partners, the Labour and Economic Development Research Institute of Zimbabwe, Ledriz. Please also tune in to Economic Panorama on Capitalk every Thursday at 7 p.m. Now, Gift, Zimbabwe's government is predicting, I believe, an average inflation rate of about 134% by 2021, and single-digit inflation month on month for the entire year. In fact, the governor yesterday stated that by December, month-to-month inflation will be 0.3%. So the question then is that, in your opinion, do you think the government has put in place the enabling environment to achieve these targets? Are they actually winning the war against inflation?
Thank you. I think there are basic elements which has been put by government. If you refer to the national budget statement, I would say it's a productive oriented budget. Right? Why 31.2% of the budget is going to capital expenditure for the first time, and that's very good, because you are basically funding production, irrigation, roads, and you stimulate the economy, right? Then 40%, which obviously Naomi will have issues with, is going towards civil servants. So they're still tightening the belt, you know,
Well, it's better than the 80% that used to be.
Yeah. But the challenge now, they won't get much luck in terms of salary adjustment to get to the poverty timeline, because we are still doing some bit of tightening of the belt to save the economy. That is still okay from an economic point of view, although there are issues on aggregate demand. So it's a balanced act. Then there is also an issue, government is spending 38% now on recurrent expenditure outside salaries, which is going to spare aggregate demand and stimulate production, and that will deal with inflation. So I was talking from the budget point of view to make a reference to the budget. Then I'm expecting the monetary policy in 2021 February to deal with interest rates. They should go down, because when they are higher, they become cost push to inflation and also discourage production. But from a technical point of view, the government is going to win the inflation war. When you look at a higher base level, look at July 2019, inflation was 837.5%. When you go to July 2021, on an annual basis, you are comparing a higher base against 2021. Inflation figures will be very low. We can be even below 100%, right? Then you bring in the blending factor of the US dollar, right? I'm sure viewers or listeners who are listening to this program can agree with me that they are not getting quotations which are changing every 12 hours. It's clearly because of the US dollar component, where you're saying I can hold on to the US dollar. So that element is blending the inflation. So from where I sit, from a technicality point of view, and also from the policy perspective, which I've explained in the budget, and the anticipation of the monetary policy, I think we can hit below 100% actually by December 2020.
And let me add, Naomi, of course, that obviously assumes that we hope that the Reserve Bank or the government doesn't print money to finance its deficit, and of course starts to deal with the foreign debt, which the minister did say in his statement that he would be looking at in 2021. But I want to ask you this. Investments in particular, foreign direct investment, FDI, has been on a downward spiral. I mean, for instance, statistics from the RBZ reveal that the FDI of the country slumped from $717 million in 2018 to 259 million in 2019 and projected 150 million in 2020. So does the government have to do anything about that to address this trend, and also to enhance local and foreign investment?
Yeah, I think the government can do quite a lot. If you take, for example, on the FDI side, we've talked about the ease of doing business, and I understand that there are still processes underway to address the doing business environment. So I think that process needs to be fast-tracked as we are going to 2021, because those are the indicators that investors look at, foreign investors look at if they want to invest. And if I give, for example, our tax regime, I was looking at it, the current state of Zimbabwe, we were at around number 149 out of 190, which is not a good report. So there is need to really work on that, so that we harness as much a domestic mobilization.
But aren't we back to the old gremlins in the room, if I can call it that? One, confidence of foreign investors, confidence that, of course, that, and again back to what Gifter said, confidence in that policy remains consistent.
Yes, exactly. I was going to go there. I talked about the ease of business environment. Then, of course, the issue of policy consistency is going to become very critical. You know, with COVID now, investments, whether foreign or local, they are more calculative, those investors, because COVID is with us. So there is really need to stabilize in terms of how we do business policy-wise, because past experience has shown us that, 2020, as we have heard, 2020 was really a mess up, especially even NDS, the National Development Strategy document, it points that policy inconsistency failed the nation. So it's the government admitting on its own. So if you are admitting on your own, we expect some corrections going forward. So we are expecting corrections in that area. We are also expecting corrections around infrastructure development, because especially social infrastructure, which is enabler, and of course the utilities, we expect more focus around that area. This is what attracts it. No one would want to invest in a country where there's always blackouts here and there, where water, is still a problem. So those basics.
those are some of the
critical.
downside risks, aren't they? I mean, the
Yes,
fact
yeah.
that water sanitation is still needs looking at, infrastructure development, both in health, education, even in our road infrastructure is critical, and even issues such as National Railways of Zimbabwe getting freight across the countries. I mean, these are some of the potential downsides that could affect economic growth in 2021.
Yeah. We need to be serious, especially on the government side, in addressing those issues. And of course, our institutions. The
You're talking
Auditor
about
General,
governance,
governance, the Auditor General statements again and again, they really expose the level of public fund mismanagement. But we haven't seen, positive and concrete steps around curbing that mismanagement. So I think
downside risks. I mean, we've spoken a bit about them. Naomi mentioned a couple there, but there are a couple that we must look out for and prepare for, isn't there, Gift?
Yeah. I think one of the downside risks is how we are going to fund the NDS1 and the budget in particular. The reliance on presumptive tax, which Naomi raised in our discussion, is going to be one of those risks because it's very difficult to tax the informal sector. The only effective way of taxing the informal sector is to provide the decent operating space, right? Then you collect the tax through the local authority because they will be covered in a proper shelter, right? You don't tax someone who's sitting under the tree under presumptive tax. And even those landlords who are being said collect $30, it's not going to work. Simply because if you only pay presumptive tax if you have no tax clearance. So those who are in the formal setup in a shop, you just get a tax clearance. Yeah, so that's a risk. Then the other one is of this cannabis expectation that the government is going to collect 20% for exports of $1.25 billion, right? Just convert it, it's about $200 million, right? Of exports from Mbanje, right? Cannabis, which we have not even grown.
It isn't exactly Mbanje, it's medical cannabis.
So to me, it's a bit crazy and optimistic, highly optimistic. I don't know where the minister is getting from. Then, of course, the other issue relates to the funding of agricultural sector, where there's smart agriculture and vis-a-vis the printing of money, which might then upset the system as far as the money supply is concerned. My last point is on the country's perception, which is tied to what Naomi was talking about in investments.
This is a confidence aspect.
Yeah, confidence issue. Right. Do you know why we got investment of $745 million in 2018? Because there was change of leadership, right? And there was this wave of confidence globally when President Mnangagwa got in. But because then later on, the abductions, whether they call them fake or real, they are creating a problem for this country. So what if government does not manage abductions, whether fake or real?
Perception now. The
perception,
perception, which could be right or
because
wrong, but the fact is it's a
we will be
perception
here
that you
in
have to
Zimbabwe,
manage.
and investors will be out there, and would want to explain. And when you're explaining, you are losing. So we should not entertain any fake or real abduction in 2021, even arresting people who are demonstrating. Right. Those things, we must not do them in 2021.
Okay, now we are coming to the end of our program, so I do want to get this final question into both of you. Is the economy, let me start with you, is the economy on the right track? And what are your sentiments on the economic outlook for 2021?
I'm very positive for 2021 for the first time. Clearly on the basis of the good NDS, the National Development Strategy is the best document. Very clear, there's clarity in terms of what you want to do. What made me even more positive about it is its implementation. As you heard from the Minister of Finance, he was very clear that they're going to implement it through the national budget. And when you look at the appropriation funds in the national budget are given to the 14 clusters within the NDS in the national budget, which is very good, very balanced, I must say. Right. What also makes me more confident is the stability which I've seen right now, notwithstanding the challenges, and the heavens which are smiling on us. Because once we get good rains, as we are getting them now, I hope there will be enough fertilizer, good harvest, we can eliminate close to $1 billion in import substitution. This is not a very complicated economy. If we have a glut of maize in this country, we save $500 million per year. And that is going to do wonders in terms of stabilizing the exchange rate because we'll be having enough foreign currency. So overall, taking into account again expectation on inflation from a technical front, I talked about coming from a higher base. I think 2021 will be a better year.
Naomi, same question. Your opinion, is the economy on the right track? And your sentiments on our outlook for 2021?
Okay. Well, if you look at our policies, it seems like you're saying, it seems probably we are on the right track. But for me, 2021 can only be positive on my side when I see some action around serious address on corruption. When I see some positive developments around social dialogue. I'm talking about the tripartite negotiating forum, where business, government, and labor sit and discuss and come up with way forwards. And that platform is critical. It has helped Zimbabwe when we were in crises before. So we can still tap on what worked that time and use it in this crisis period that we are in. So we need mutual trust in TNF. We need implemented agreements. If government, business, and labor agree to walk in a certain direction, let them walk. Consistency, we come back to consistency. So it can only be hopeful for me when those areas are addressed. I think we can go a long way.
Well, there we go. I think some positive sentiments there from my guests. We have unfortunately come to the end of our program this afternoon. You've been watching the Mint Special Economic Panorama. Our discussion, 2020 in retrospect, and economic outlook for 2021. This broadcast is brought to you by Zim Paper's TV network, ZTN, and our partners, the Labour and Economic Development Research Institute of Zimbabwe, Ledriz. Of course, don't miss Economic Panorama on Capitalk every Thursday at 7 p.m. I'd like to thank my guests, Naomi Chakanya, she's a senior researcher at Labour and Economic Development Research Institute of Zimbabwe, Ledriz, and Professor Gift Mugano, an economist, and of course, Sekai Kubarika, CEO of Confederation of Zimbabwe Industries, was unable to make it this afternoon. Ladies and gentlemen, thank you so much for appearing on the Mint Special.
Thank you.
Thank you.
A final comment. The COVID-19 pandemic exacerbated the underlying and pre-existing socio-economic challenges that include inequalities, high levels of food insecurity, limited social protection coverage, weak institutions, huge infrastructure deficits, particularly in terms of water and sanitation, a weak public health delivery system owing to years of underinvestment, chronic high inflation, and an economic slowdown. That's our past. The Zimbabwe government believes that they have, through the Transitional Stabilization Program, combined with such initiatives as taming money supply growth and introducing the Dutch auction system, stabilized the Zimbabwean economy, and that 2021 is the year in which the economy will begin to show signs of major recovery, all things being equal. On Monday the 16th of November 2020, the President officially launched the National Development Strategy 1, or NDS1, which runs from 2021 to 2025, as a successor to the Transitional Stabilization Program, TSP. The NDS1 is highly ambitious and is underpinned by 14 priorities. It also seeks to move the country from a lower middle income society towards an upper middle income society by 2030. Of course, there are numerous shocks to our economy that may still occur in 2021, but commentators think that the current stabilization in the economy will continue into the new year. For a hard-pressed population still reeling from the COVID-19 pandemic, this just may be what they want to hear for Christmas and the new year. I'm Andy Hodges. Goodbye. Have a happy Christmas and a fantastic new year. Goodbye, and you all be safe.